So, Joe, out of every self-employed business owner who walks into your office, what percentage of them actually understand what their liability policy covers?
Not many do. Not many do. They don't. They understand the concept of the business. They don't understand the liability that runs with it.
Okay.
Some people don't understand the concept of, the cost, what entails, and how the insurance is going to make sure that they're protected all the way through the process.
Kind of, they have a broad picture, but not really the minute details.
Correct.
And the
It's one of the
details,
details that they kind of miss on.
right? And it's the details that what matters.
Absolutely.
Well, we're going to learn more about commercial liability and the different types of insurance that are available for businesses on this edition of the Loan Doctor podcast. I'm Rich Brandt, the Loan Doctor with the Brandt Lending Team, here with my good friend Joe Santiago, Advanced Professional Services. Welcome to my waiting room. When somebody goes from a W-2 job to self-employed, what's the first insurance conversation they should be having that most people skip?
The first insurance conversation they should be having is, first of all, the type of business that they have to understand what needs to be covered. And depending on what the business is, me as an independent broker, I'm able to do analysis of their business and understand what they want to do and how they want to take the business and what level they want to take the business, so that way we can structure the policy according to their needs. But the biggest thing that our people minimize or don't take into a lot of consideration is liability.
Liability. Okay. All right.
Correct.
We're going to talk more about liability as we go on in this, but let me ask this. Do most people, as a business grows, does their insurance coverage have to increase if they're not like getting additional equipment or stuff like that?
Well, as a business grows, the exposure grows.
Okay.
And that's something that they have to understand. Many people don't don't do an annual analysis to understand how their business is growing, how it affects their liability aspect of it. So, many businesses I've seen that they have been in business for 10, 15 years, yet they still have the same limits and the same policy they bought 15 years ago without taking consideration their growth. And, if, for example, like in a restaurant business, when you start, you don't have that many clients coming in, but then as your business grows, you have more people coming in. The more people that walk through your place, the higher the liability.
Yeah, it's funny you were saying that, and I was in before I was the loan doctor. I used to own a process service company, and yeah, when my company like grew, and even when we went national, I didn't change my coverage, and I probably would have needed to.
Oh, absolutely.
Is there ever a business that doesn't need insurance?
No, no business does not need insurance, and not because that's what I do. You got to have some sort of insurance, whether it's because, if you want to protect your assets, you want to protect your livelihood, you should. Now, are there certain policies that you should have or not have? Absolutely. There's certain coverages that you don't need.
Okay.
But as far as no insurance, I don't think that's an option. I mean, we live in a very litigious society, and, we have to protect our biggest asset, which is our business.
Right. Yeah, absolutely. So there's no point where somebody's like too small to say I'm trying to I can't even think of like the type of businesses, because any type of business has the potential when you're interacting with the public to do some kind of damage.
Well, absolutely. I mean, some people don't. Let's take somebody like an electrician or a plumber. They're independent. They work on their own. They don't have employees.
Right.
So what's the harm? Well, when you go to somebody's home and you do some sort of work, and God forbid you cause damage to any part of the home, or your work did not come out quite like you expected, you either going to have to pay out of pocket or have an insurance policy to take care of it. So it doesn't matter how big or small you are, there's always that risk of liability that you're either out of pocket or you're going to have the insurance to back you up.
Have you seen in your how many years experience you have at this 20?
So 27 years.
27 years. So have you seen somebody who was not adequately insured that it basically shut down their business?
I have seen many people that not quite shut down their business, but it really put them in financial hurt big time. As a matter of fact, there was a practice in Orlando that they got audited by the government, and when the government audits, especially medical practices, when they audit the practices, any revenue coming in stops. You don't get paid until the audit is done. And if you're heavy on Medicare and those billings, um, there's your income. So they ended up having to shut down because they could not sustain the long time without income.
I should preface this by that question wasn't really your customers because your customers would be adequately covered.
My customers
This
will be
is
out of it
people
covered.
who would be reaching out to you saying, "Hey, what can I do?"
And unfortunately, they reach out after the fact, and we're just too late for us to do anything about it.
Often in lending, we say, and we know somebody jointly who says this all the time. It is much easier to borrow money when you don't need the money. Does the same thing happen with insurance?
Oh, absolutely. You know, it's funny. Before I got here, I got a phone call that somebody was asking me, "Oh, we need you to take a look at the insurance policies we have. Not all with us, and because we have a claim." And to me, it's like, okay, I didn't really get into that conversation with him. I'm like, sure, I'll be more than happy to take a look at it, but I hope he understands that you already have the claim. It's not going to be covered just because you're buying a policy. I mean, if that was the case, then think about it. Right before you have a car accident, it's like, hold on, don't hit me yet. Let me get an insurance policy, and now you can hit me.
Right.
It's just, it doesn't make any sense. So,
Right. Or even after the fact. Hey, I just got
exactly.
in an accident. Can I buy insurance?
Get insurance now? Yes, you can pay for it.
Oh, and I'm really hurt. I'm sure. What's the difference between something protecting your business and something protecting you personally?
The difference is what you're covering in the business versus yourself. For example, if you have a service in a service industry like a restaurant, you're going to have the insurance policies are going to cover, the liability of if you're selling liquor, the liquor liability, and the tables, the chairs, the equipment that you have. That's protecting the business. The biggest thing protecting yourself is the liability. Should something happen, somebody get injured. God forbid, if you're in the restaurant business, somebody drinks and becomes it's drunk and commits an accident. A lot of times, that goes up the ladder to the restaurant or bar where the person was. So, you always want to have to make sure that not just the contents on your business are protected, but also the liability that may come up the ladder to you.
Gotcha. Okay. Now, for someone who's been in their business, let's say they're running a business for years, they're uninsured or underinsured, and nothing's gone wrong yet. Are they just lucky? Like, what would you say to that person to sort of to say, yeah, you've been lucky so far, but eventually that's going to change, right? Historically speaking.
Historically speaking, yes, it will change. But if I meet that person and that's in fact the case, then I will ask him, "Can you get me the lottery numbers?" Because that's an extremely lucky individual that's been in business for all the time they have been in business, never had insurance. And many times, it's funny because recently we had a client that came in, hasn't had insurance in like 10 years. Now they're purchasing insurance, which for me is fine. But the question is, why do you want insurance now? And insurance companies, believe it or not, they ask that question. Okay, if this person hasn't been insured, why do they want insurance now?
Right.
Sometimes people just leave it up to luck.
Is there, like with auto insurance, if you go from having insurance to like a lapse in coverage and then you get new insurance, the premium I think is a little bit higher or something like that. Does liability and business insurance work the same way? If you have like a business, if you don't have coverage for the last 6 months?
Yes, many times, not only sometimes the premium, yes, is going to be a factor, but many times what happens is when you don't have insurance and you go from having insurance, no insurance, to then going back to insurance, many times what happens is that then you really shrink the market for yourself. Not many companies want to insure somebody that was not insured. So that kind of limits the market. And the problem is, supply and demand. When the markets become limited, then that's why the premium goes up. So best case scenario is always have an active policy through the year. You can always adjust the limits according to your needs, but it's best to always have an insurance policy so that way you don't end up paying more than what you should.
All right. But so most of my clients are self-employed. So and I would assume that most of them have insurance. In fact, when I look at their tax returns, I can actually see it. but for those that might not have insurance, so you can expect to pay a little bit more for like 6 months. After 6 months, can you go to a different policy now that you've had insurance, or is the timeline longer?
Generalize here. Every policy is an annual policy with the exception of auto. You have auto for every 6 months.
Okay.
Most of the policies, 90% of them, are going to be annual policies. You can get an auto for an annual policy, but you know, the common policy is 6 months. So best practice is to, if you purchase a policy, unless there are extenuating circumstances, keep that policy for the year. And then if you need to move or reshop or whatever the case may be, do it at that time. Many carriers frown upon people that move midterm. Many carriers won't even want to insure somebody that's moving midterm because they want to see continuity.
Got it. Okay. So there's an advantage to going the entire term of the.
Absolutely.
Okay. Now, for workers' comp, right? When does a self-employed person become legally required to carry workers' comp?
It depends on the industry. Every industry, with the exception of construction.
Okay.
In the state of Florida, it varies per state, but in the state of Florida, when you have more than 4 employees, you're required by law to carry insurance.
Okay.
More than 4 employees.
Regardless of the type of business.
Regardless of the type of business.
Okay.
Except construction. So you have to have more than 4. I mean, listen, if you have 1 employee, you should, but by law, you only require if you have more than 4. So
does that include the business owner?
No.
Okay.
The business owner is not included in there, which, again, that's a huge other topic within itself that we can do in another podcast.
Yeah.
But, yes, but, you know, and then in construction, according to the law in the state of Florida, the owner is considered an employee. So you have to have workers' comp for if you have just 1 individual. If you have 1 employee, then you should. There are many people that get creative and go to, yes, it happens.
So use subcontractors instead of employees.
Yes, that's a lot of, a lot of moving parts. But by law, those are the 2 requirements in the state of Florida.
Now, you specifically mentioned Florida, and because I do loans nationwide, you can also do insurance in other parts of the country as well, right?
Correct, yes.
How many different states?
So we're in 26 other states that we have clients on, and we're actively doing business in 26 states.
All right, go ahead and name them. No, I'm just kidding.
Florida.
Okay, that would take a while, right? Plus, for somebody tuning in, all they're going to hear for like 2 minutes, somebody, what's this?
What's this?
Okay, the guy knows geography.
Yeah, there you go.
What's a financial nightmare scenario for somebody who skips workers' comp and an injury happens?
Well, workers' comp, it's a little bit misleading because workers' comp, it's also a disability policy.
Okay.
So if one of your employees becomes disabled on the job, many of those policies, they don't have limits for medical. So the limits that you have in a policy is not for medical. Medical is infinite. Disability, if the person becomes disabled for the rest of their life, just they have to pay for whatever length of time. Of course, there's a lot of factors involved with it, but and if you don't have workers' comp, then you are 100% liable for the individual's injuries, disease, anything that may have happened on the job. So, and in the state of Florida, they take it pretty seriously. Many inspectors go to businesses, and they know when you have a policy and you don't. They go to a business, if you cannot show proof of workers' comp, they'll right then and there shut you down. You have to close the doors, send your employees home until you have a policy. You automatically get $1,000 fine, just doesn't, unless it's a nice inspector.
Right.
And what happens is that, and again, the calculation is done with the state, but basically what's going to happen is they're going to figure, okay, you should have had insurance for 2 years, and your premium, you just got a policy for $2,000. So now we're going to calculate 2 years of premium times 2, and that's the other fee that you owe the state above and beyond your $1,000.
So in addition to the $1,000, you owe the state the money for coverage that you should have had but didn't have.
Penalty, correct, in penalty.
Okay,
so
right,
it's expensive not to have it.
Yeah, no, absolutely.
Yes.
So I had a situation because there's also one of the things that happens with workers' comp is it limits liability to the company too from like some, right? So let's say somebody gets hurt on a job, and typically where they could sue the employer or something else. And I'll kind of go over why I sort of thought about this question in a minute. But they can't go after the business because the damage is limited to whatever the workers' comp claim is.
Well, because the purpose of workers' comp is to protect the employer against any lawsuits from an employee getting injured on the job.
Right.
So that's your protection for the injured employee.
But the employee's injury is also capped in terms of what they're entitled to, right?
Well, not in medical expenses. Medical
No,
expenses,
no.
there's no
But
billing.
pain and suffering, or
That's that's more that's will be a civil matter that probably will go above and beyond the workers' compensation scope of it. The scope of the workers' compensation is any injury on the job,
okay,
physical injury.
physical injury, so
Yes,
not mental. So
not
if somebody, can somebody sue the employer under their liability coverage for pain and suffering for an injury related on the job?
they could. I mean, yes. The bottom.
Oh, it's
The
possible?
answer is yes. It's a possibility. Yes, it is possible. However, the purpose of that, the workers' comp, is to make sure that person is made whole.
Okay.
And also loss of income and also disability and also health care. So it's to make the individual whole. Listen, you're never going to be back to where you were before,
Right.
but at least that helps with the
Get-
blow of being injured on the job.
So one of my friend's son, who was a mechanic, worked for like an automotive shop. The shop had him go offsite to like another facility. While he was at the other facility unloading, that had nothing to do with the business, the racks that some equipment was on fell on top of him, cracking his skull, like really, really bad injury. And so workers' comp kind of limited what he could collect. And what he had to do was sue because he was on another site, he was able to sue them and kind of be made whole that way. But if had he been in the place, he would have been limited to what he could collect.
Well, that right there, it's a one of those scenarios that are, yes, you're gonna see the situation that it protected me because I am there because of my employer, but then again, the incident happened because at that location, maybe the racks were not installed properly or whatever the case may be. Then yes, absolutely, you have the right to sue that business. For negligence. However, what you're gonna, and again, this is gonna be another podcast within itself. You know, the workers' comp is probably gonna say, okay, well, you recuperated X amount towards your, healthcare. We're only gonna pay up to this amount because the idea of insurance is not to make money; it's to make whole, put you back to where you were prior to the accident or close to it.
Yeah, but there's got to be something for, and again, I'm not advocating on the right of the people, but there's got to be, if it's kind of like, and I think I remember an attorney doing this. I have a new car, I get hit into an accident. You fixed my car, but the value of my car is not the same. I have a loss in value, so I'm not made whole until I get paid back for that loss of value. Then I'm whole.
Correct.
Right. Okay. So if I'm injured and I now I don't have the potential to make increased in salary. I'm limited in that capacity. I have pain every day and stuff like that because of my injury. Right. Getting paid for my medical expenses doesn't make me whole. Right. And sometimes it's not about money. Right. Sometimes what ends up happening in a society is we take money to replace what we can't replace.
Correct.
Right? What is the value of you not being able to do this again? Or what is the value of you feeling this way every single day?
Correct. Well, that's why when you have a disability, when you have collective disability on the workers' compensation, there's different percentages and rating of disability and how much you can and cannot do. So, perhaps you were a construction worker. Now you cannot work construction, but you may be able to work in a different capacity, doing something else.
Right.
Not as strenuous as it will be in construction. So then, the benefit that you get from there plus the salary kind of, they kind of match a little bit.
Got it.
Try to bring you to where you were.
Yeah.
But, listen, it's never going to be perfect,
Right.
unfortunately. And, an injury is an injury. But at least we have something to keep us going in some capacity.
Do they in other parts of the world? Do they have workers' compensation?
Other parts of the world?
Yeah. Do they?
I'm not very familiar with any laws outside of the United States or in other countries, but they do have some similar concepts. A lot of times, it is a contribution from employers to for lack of better terms, like a pot.
Okay.
And then where the employees can collect from should something happen, but not quite workers' comp. kind of work the
Yeah,
same way.
I guess most other places also have like socialized medicine, so their healthcare is already kind of covered
Correct.
anyway.
Correct.
I gotcha. Yeah, so one of the things that happens in lending is in we have a secondary market that drives mortgage rates and stuff like that, and most loans fit into the secondary market. And when I say secondary market, I mean terms that are might be familiar to some, like Fannie Mae, Freddie Mac, and Ginnie Mae. So what happens is that allows us to have 30-year fixed rate mortgages. Most people don't know, but that the rest of the world doesn't have a 30-year fixed rate. It's a very rare thing. Most of the time, it's like a 5-year term, and then it readjusts every 5 years. They might have a 30-year term, but it's not going to be fixed for the whole time.
Correct. Well, it's interesting because we visited Costa Rica many years ago, and the conversation we struck a conversation with some of the people that were there that were from Costa Rica, and they don't have Social Security.
Oh, yeah.
So what happens is that every employee, when they're working, they have to contribute towards a savings account, if you will, and that's their retirement fund.
Okay.
And it's a government mandate.
Does
So
it get interest?
I'm going to assume he does, but that was very interesting. It's like, okay, you don't have that, but you're basically making people that work save for retirement, which it was very interesting.
Fundamentally, I like that better. I'd rather be in control of my money. Look, I am all for paying the government as much money as they need. The only thing they have to do is prove that they can spend it wisely.
Oh,
The minute they do that, you can have it all. Until then, I'd rather keep it.
I'm with you on that. Absolutely.
So it doesn't seem like that's a problem they're going to be fixing anytime soon.
No, I don't think you're going to be putting money in a savings account anytime soon.
So it just me, no employees. I'm not in construction. Do I need workers' comp for myself?
No, if it's just yourself, you don't. Just make sure that you're properly covered as far as the business is concerned. But no, you don't need the workers' compensation. Make sure your health insurance is up to date, and you'll be good to go.
Is workers' comp one of the more common policies that you carry for every business?
We do. It's most of the common policies and business insurance. However, our market is a little different because we work with a lot of professionals such as healthcare providers and law firms. And that's our niche market. That's where we really do a lot of our insurance policies. So we do medical malpractice, lawyers' professional liability. And that's why our main focus is also their business, their liability.
You're jumping ahead. We're going to get to that. We have plenty of time.
Okay, no problem.
On this, but so for workers' comp, sticking on workers' comp for a couple more questions. How are the premiums calculated? Payroll, industry, claims history. Like how is all that determined?
Okay, so one misconception of workers' comp is a lot of people say, "Well, I want to shop workers' comp." Workers' comp is set premiums, set factors, is based on your payroll.
Okay.
So if your payroll is $200,000, it's going to be calculated the exact same way with company A, B, or C.
Doesn't matter the industry.
Doesn't matter. It's all based on factors that are set by the NCCI. Now, what's going to happen is that some companies may have like a dividend program or things like that they're able to give back to the insured, but it's going to be the exact rate no matter where you go because it's strictly based on salary.
So
Payroll.
Right. So if I have a law firm, my workers' comp coverage for my law firm is going to be the exact same as my workers' comp coverage for, let's say, my circus, where I have people doing flips and could fall to the ground.
No, there's going to be factors. No, there's going to be factors that are going to be, for example, a factor of 1 for law firms and a factor of 2.3 for a circus.
Okay.
So you get the payroll times that factor, and that's how you come up with a premium.
Okay, so different businesses will have a different factor based on risk.
Each business is going to be classified with a code. Each business is going to be classified based on a factor, depending on the risk. That's how the factors go.
So payroll factor. And then the premium.
Correct. The higher that factor you see the number, the higher the premium is.
And the premium is promulgated, so it doesn't matter if I go to you, if I go to whichever. So really, it's about finding the right agent that's going to make sure you're completely protected, because it's not about, in this case, it's not about price. Everybody pays the same premium.
Correct, and it's about classification as well. For example, in your case, let's say you have, the circus acrobats, but then you also have your office staff. Well, the classification is going to be different. You're going to have office staff and acrobats. So acrobats are going to be a factor. Office staff is going to be a factor. So you got to make sure that you properly classify all the employees in a
So
business.
you could be paying more if you're just lumping everybody together.
Exactly, which we've seen a lot. A lot of people write a workers' comp policy, and everybody's classified as the acrobats.
Do people ever try to classify somebody in the wrong category and hope they get away with it?
I've seen it many times. Unfortunately, fortunately, a lot of the workers' comp policies are always audited at the end of the year.
Okay.
So that's where you got to see the big hit on, okay, you misclassify it. Now we're going to classify it right, and here's your bill.
And here's your penalty
Here's your
and all
penalty,
that for
correct.
everything that you didn't do.
Pretty much.
Now, that's funny because it's like you read my mind. Walk us through what a workers' comp audit looks like.
So what they do in the workers' comp audit, so when a workers' comp policy is first written, we take the payroll for the annual payroll and make a calculation how much your payroll is going to be, excluding officers, and then that's how we determine what the premium is going to be. Now, keep in mind that throughout the year, you may hire more people, you may fire people, so your payroll may fluctuate. So what happens is if your payroll increase at the end of the year when they do the audit, they're going to say, okay, we rated you based on $200,000 in salary. However, based on your actual salary, once you gave us all the accounting paperwork that they request, it was $300,000. So now the insurance company is going to say, okay, now we're going to bill you the difference.
Okay.
200 to 300.
No penalty, but
No penalty, just billing the difference for the premium. Okay. However, workers' comp is the only policy that will do this is that at the end of the year, if you estimated your payroll at $200,000 and your payroll ended up being $100,000 at audit, they will reimburse you the difference of overpayment in premium.
Now, you said except for officers?
Yes, because officers and owners, they can be exempt for the policies.
Oh, gotcha.
So by exempting, what exempting does is just takes their payroll and exclude it from being calculated into the policy.
Okay, gotcha. Now, how does using subcontractors change the picture? And what happens if a subcontractor gets hurt?
Interesting you say that. There was a case that I was working on a few years ago. But, when it comes to subcontractors, it really, really impacts your workers' compensation, any insurance. It will impact your insurance regardless. But, specific to workers' compensation, what's going to happen is the insurance company is going to basically say, okay, we know you're going to use subcontractors, but we're going to go ahead and figure out, okay, if you use more than 30%, okay, and I'm just using that as a guide, you're going to have a hard time getting insurance. If you use less than 30%, we might consider you. You might pay a little bit more because of the exposure. Now, many, like 3 or 4 years ago.
Are subcontractors covered?
Well, no, because subcontractors technically should be covered by their employer.
Right.
However, a few years ago, we had an incident that this company hired a subcontractor to do a job. One of the employees for the subcontractor got injured. The subcontractor did not have workers' compensation. So now what happened is that now the subcontractor employee that got injured now filed under the client that had the workers' compensation.
Right.
So his argument was, but he's not on my payroll. He's not my employee. However, once you get a subcontractor, you assume that liability for those individuals if they don't have workers' compensation. So it's going to come right back to you. So my advice is if you're using subcontractors, always make sure they have their own insurance policies, their own workers' compensation, because you could pay for that injured employee, even though he's not your direct employee.
So if you want to make sure, if you're hiring a subcontractor, now what happens if you're hiring like a plumber to come into your house? That doesn't matter because you don't have workers' comp for your house.
No, correct. No, the homeowner doesn't need it, but the plumber should have it or should have some sort of insurance.
But if I have a plumber coming into my business and he gets hurt,
that will be different. If he's coming to your business because he's doing work, fixing a faucet in your business, that's his own separate business. I'm talking, for example,
if I was a contractor,
if you were a contractor,
and the plumber came in,
to subcontract the work of plumbing, then that's correct.
Okay. So there's some nuance there.
Absolutely.
With regards to subcontractors, I know the IRS has a classification that says you're a subcontractor, and a lot of times there's a little bit of a gray area where you say they're a subcontractor, but you're treating them like an employee. And if it looks like a duck and quacks like a duck, it's a duck. Does the audit do that same kind of thing?
You know, it's interesting. We run into a lot, and a lot of clients misunderstand the concept of it. Just because you pay someone 1099 does not make them an independent contractor. That's just the way you're processing your payroll. So if it's an individual that's working for you, keep in mind one thing: a true subcontractor have to have their own entity, their own insurance, their own equipment, and are not under direct supervision of yourself. So if you have somebody that's working in your office that comes in every day, clocks in, clocks out, and works with your computers under supervision, that's not an independent contractor. It doesn't matter if I'm paying him 1099 or not. So that's a huge misconception. So the answer to your question is, if it's a true 1099, what's going to happen is a subcontractor, I have to make sure that they either have the proper coverage, or if it's an individual, is exempt. Then at that point in time, when they do the audit, the insurance company is going to say, okay, where's the policy for this individual or the exemption? If I cannot show proof of either one of them, that subcontractor is going to be counted towards my payroll.
Payroll, and now he's an employee, and now I've got penalties and everything. All right. Okay, fascinating. This is why it's funny because every time you say this is all I'm hearing is this is the difference between me going online and trying to get insurance for my business. Oftentimes when people call me for a mortgage, they have an idea of what they want or what they think they need, right? And then when you find out and you actually get the pieces of their puzzle, you're like, well, wait a second, hold on. That's not what you want. And let me tell you why you don't want this and why this would be better. And that's going to happen in your business too, is that somebody somebody can get information and say, hey, this is what I want. But it really takes somebody who educated, knowledgeable, 27 years of experience that can say, well, wait a second, here's your business. Here's the way to structure it. And even like what you were saying about the workers' comp, I didn't even think about that as categorizing different people under different ways, instead of, if you have a high risk business, not everybody in your business is doing a risky behavior.
Well, one of the things that I'm proud of is that in my brokerage firm, we take the time to discuss the insurance needs of our clients. We're not transactional. We discuss their needs, look at what they have, can we improve on, or are they okay with what they have, and just give them advice accordingly. And we build that trust with them and want to make sure that they feel comfortable having insurance, because many times I've seen policies that should not have been written that way, policies that I'm like, why? And I scratch my head, or policies that I even say, listen, this is an amazing policy, keep it, and we'll move on from there.
One of the questions in the mortgage space, one of the questions that I'm astonished gets answered all the time is, what are your rates? Yeah. Right? People call me all the time and say, hey, they're shopping for a mortgage. They want to know what my rates are. And the fact is, my rates are very much predicated on the pieces to your financial puzzle, right? What your credit score is, how we're determining your income, what kind of property you're buying, how you're using the property, et cetera. And so all those factors matter. And if I'm not taking the time to ask those questions, then I'm giving you a number that doesn't have any real meaning. And you're going, you might feel good for the moment or feel bad. And then a lot of my contemporaries give you like a ridiculous number that doesn't apply to you. And I'm much more of a believer of, are you calling me to ask me what a rate is, or are you calling to me to ask me what your rate would be?
Correct.
Right? And if you're calling to ask me what your rate would be, great, let's talk about your business, or let's talk about what you do. And I would imagine you're the same way. I don't know if you get that question or if people kind of understand.
I do get out of that question. First of all, we don't, we're very regulated.
Yeah.
So it's not like we charge a fee. We can't.
Right.
And the client doesn't pay us. We get paid by the insurance companies. Now, one of the things that a lot of people don't, when they ask, oh, what's my, how much will be for my home? It's like, well, I cannot just look at the address and give you a rate. There's a lot more involved to find out, about the home in order to give you a quote. I need a quote for my auto insurance. Well, we need a little bit more to know about your auto insurance and your driving history to give you the right, the right number.
Exactly.
So, and I'm sure you probably have to look a little bit deeper than just the what it is. It's a mortgage. Yeah, I know you need a mortgage, but we need to know a little bit more about you before we can give you a number.
I'm astonished by how many people give them a number. I'm just blown away by it.
Yeah,
And it doesn't make any sense.
Nope.
All right, let's get break down something you're going to be excited to talk about.
All right.
All right. What's the difference between general liability and professional liability?
Okay. So general liability is more specific to a business, is more specific to somebody. Product liability, for example, if you make, if you're a baker, you make bread and the bread gets boiled and makes somebody sick. Product liability. If somebody walks into your place, slips and fall. I had clients that are doctors that patients went to their office, tried to sit on the table and fell down and got injured. That's a general liability. Protects the business. Professional liability is going to protect. It does exactly what it says. Protects the professional against any lawsuit for failure to provide a healthcare provider, failure to provide the standard of care, failure to provide the advice according to their specialty or their license. So that's what professional liability does. It's more an advice. So if you're in an advisory position, you're licensed with the state, yes, professional liability is definitely needed.
So does professional liability cover if you're a doctor, would it cover your like nurse practitioner or cover the administrator if they said something or did something wrong?
Well, it's going to cover the healthcare providers that give the advice.
Okay.
One would think that the receptionist that may not have the experience is not giving medical advice or legal advice. But it's gonna be the licensed healthcare provider that is treating the patient or dealing with the client.
So that I understand it, and so our audience, so if let's say the receptionist, at a doctor's office gave me advice, told me, oh, take this, right? And that wasn't a good idea, and I was allergic, and blah blah blah, and something happened, right? Or not me specifically, but something happened to somebody. Would that coverage go under their professional liability coverage, or would it go under their general liability?
No, that point in time, if it happens something like that, it's definitely going to be under the professional liability. And again, insurance. The funny thing about insurance is always gray. But that's going to be more on the vicarious liability side of things of any employee because things may happen. So, yes, many policies on the professional liability include employees, which it could be.
Got it.
Although the receptionist shouldn't, but also falls under that.
Now, do you typically have your professional liability and general liability policy with the same carrier?
Not very often.
Okay.
Most of the time when you're going to find something that's professional liability and general liability combined, it's going to be more for large practices that you can do something like that. Multi-state practices, you can do something like that. However, more often than not, I don't recommend it because one of them is going to not give you the full coverage that you need. So many times, if you deal with a professional liability policy and they throw in the general liability, it's an add-on. It's not exactly the full coverage you need. With the separate general liability policy, you can address the specific needs for the practice. Professional liability, you deal with the specific needs of the professional individual that's being insured. So more often than not, that's a lot of people like to call it bundle. Bundles are not always the best.
Always the best. Okay, correct. So it reminds me of the car boat, like that little duck amphibious vehicle, right? Yeah, it does both of those things, but it's a shitty car and a shitty boat.
Yeah, absolutely.
It does do them, but they both suck.
And they don't look that great
right.
either. So.
Yeah. So okay. So it's funny. So is there ever a case when you have a general liability and a professional liability, since they're not with the same people, for understandable reasons, where the two insurance companies are fighting and saying, no, this doesn't fall under us, this falls under you, and they're going, no, this falls under you, not us. Well, and they kind of fight back and forth.
It very rarely happens. Very rarely happens because if the person is injured in the office, you didn't push them.
Right.
They didn't get injured because you were treating the patient. Get injured because they fell or slipped or something happened. So it's very, very rare. There have been very minor instances that there was like, oh, no, it's this, it's that. But at the end of the day, they figured it out and took care of the client. But it's very rare.
Well, I could see that's funny because I'm just, and again, I'm just trying to think of a doc. If I'm let's say a receptionist at a doctor's office, and my neck is hurting, and I go ask the doctor something, and he tells me what to do, and it ends up being bad. Like, where does that fall? I was working.
Well, at that point in time, it could be a professional liability situation if
Okay.
he gave you the wrong treatment or the wrong advice, and it caused
gotcha.
major
But
injuries.
typically, that's it, just because you have separate policies that moral ambiguity there isn't something you typically have to worry about.
No, not at all.
Okay,
Not at all.
Perfect. What's an umbrella policy, and what point does somebody need that?
An umbrella policy is very interesting. I jokingly
Glad I
say,
asked.
I jokingly say that umbrella policies or excess liability, they're very, very similar, are designed to not pay.
Okay.
Okay, and I say that jokingly because what's going to happen is an umbrella policy is going to go above and beyond your underlying policy.
Right.
So if you have a business liability and your liability is $2 million and you have a $1 million umbrella, then it's just going to add another million to that too. So you have $3 million. But the umbrella company, the policy that's the company that's issuing the umbrella, they want to make sure that you are the highest limit possible under that underlying policy. For example, and I see this a lot, and I highly recommend that if you have for your auto insurance and your home, if you have new drivers, definitely should get an umbrella policy. Should something happen, at least you have the $1 million there to protect you. But what's going to happen is on their auto policies, you cannot have $20,000 liability. They're going to expect you to have $300,000, which is the max,
Right.
and then the umbrella above that.
Oh, right. That'd be funny.
Well, yeah, because otherwise, why am I going to get the higher policy when I can get the lower and get $1 million umbrella?
Yeah.
So that's why they're always designed to, okay, you have to have the higher limits. So
Got to mitigate their risk.
absolutely.
Now, where does E&O insurance fit in, and who actually needs that?
E&O insurance, it's the same thing as professional liability. It depends on the industry. You call it a little differently. So if you have a doctor, medical malpractice. If you have lawyers professional. Somebody
estate.
somebody like an insurance broker. In order for me to do insurance, I have to have insurance, which is the E&O, errors and omissions. So real estate agents and they have errors and omissions.
Right.
And those are so it depends on the type of
Mortgage
industry.
brokers, too.
Yeah, mortgage companies, mortgage brokers, they have errors and omissions. Depends on what you do. At the end of the day, everything falls under the umbrella of professional liability.
Okay. So an E&O insurance is a part of the professional
It's
liability.
professional liability, correct.
Got it. Okay. Now, cyber liability feels like something that nobody thinks about until it's too late. Who actually needs that?
Every company should have it. And one of the things that I have seen a lot, and it's a huge misconception. First of all, it's not overly expensive. But one of the things that we have to understand is that now we have more people working at home. And so, years ago, the parameters that we had is, in my office, I had these firewalls and I have all this security in place to protect our computer system at home. Now with people working from home, many people working from home don't have the same security parameters in their homes. So now the data that you have in there for your business, for your clients, it's more exposed. And it's very, very easy to get into. So cyber liability, it's definitely, or cyber insurance is something that you should definitely consider when you have a business. It's, malware, equipment, anything hacked, all that is protected under that. And especially if one of the things that I'm going to take too much of time on this one, but one of the things that you have to keep in mind is that if for some reason you as a mortgage broker, you have a lot of personal data in your system.
Yeah.
And if for some reason somebody gets a hold of all that data, now if you have 2,000 clients in that data, now you have to every single client, you have to send them a letter saying, hey, your system got hacked, which we probably got one of those from one of the big companies.
Sure.
Not only that, now you have to set up a credit monitor for every single one of them. That you have to be out of pocket for that.
Right.
To monitor the credit to make sure that nothing happens to the credit because of the data they took from you. So all that adds up to millions of dollars. And cyber insurance really helps you cover all that expense.
Got it. What would you say? What percentages of businesses do you think don't have cyber insurance? Because it does seem like people don't get it until they get hacked, they get ransomware or something like that.
You know what? I don't have official numbers, but based on my speaking with many of the current clients and potential clients, it's up there. I want to say 80%. And again, I'm just throwing numbers.
I got it.
But it's very, very high.
Is it
People
expensive?
don't have it at all. It's not expensive at all. It also depends on the type of business you do, the industry, and also how much information data you exchange through website and things like that. So it varies.
Now, if you have like a VPN and stuff like that, does that mitigate some of the costs?
Oh, absolutely. Absolutely. If you have multi-factor authentication, VPN, if you don't have remote access to yourself or other people, the mobile devices, how much data you store on your mobile device or have access through a mobile device.
Got it. Okay. Now, a lot of my clients are real estate investors. Does a landlord need a different kind of liability coverage other than a regular homeowner coverage?
Yes. So big misconception on when it comes to homeowners. A homeowner's policy is going to cover the homeowner that lives in the property. If you own the property as an investor and you purchase the property but you're renting it out, you're not going to have the liability that you have at homeowners because you don't live in it. So you're only covering the dwelling itself. So, and usually the dwelling policies don't include liability. So at that point in time, you want to make sure that you have a liability policy in case something happens with a tenant or somebody that goes into your property. Even, let me take it a step further. If you buy a piece of land and you have construction going on, you're building your dream home. And what happens is, the company may have insurance for the structure they're building, but the land itself, you have to make sure you're covered for liability in case somebody goes into the property, even while being under construction, and gets injured.
Right. We have them make sure that the homeowner takes out a builder risk policy
and a liability policy. Correct.
Right. Well, I think the builder's risk usually comes with
Usually
the liability.
doesn't. Really? Usually doesn't. No, it only covers the from the foundation up. That's what you're covering under the builder's risk.
No, because we do it when there's just land. Like
correct.
Okay.
So the builder's risk is going to cover the building itself that they're building.
Right.
The land, the property itself that's under the owner of the property many times is not covered.
Under liability. Okay.
Again, I hate to generalize in insurance because many policies may vary, and a lot of insurance carriers may vary. So there's carriers that may offer certain additional coverages that some others don't.
So you might have touched on it, but what's one thing that real estate investors get wrong about their coverage that you wish they would have asked you sooner?
Again, everybody minimizes what they have. Many people, when they purchase an investment property, they're like, I don't care if a hurricane takes it. Well, yeah, you don't care now because a hurricane is not here, but if it happens, you're really going to care. And and some of the things that a lot of investors don't take into consideration is the liability aspect of it and the proper property coverage. We had an investor one time that purchased several properties. One of them, we don't care about this coverage. We don't care about that coverage. Okay. They signed off on it. They had a fire and it was not covered because they thought it was covered under somebody else. It was like, no, that's not it. But we told you. So it happens.
Yeah, it's funny. I don't know if I should say this on the air, but I have properties that have that the fire insurance is more than the property's worth. So when a new tenant moves in, we give them a Duraflame log, lighter fluid, and matches. If you're not happy with your experience, make us pay.
Make us pay.
So, man,
when in doubt, torch it.
Yeah, right. No. Now, if anything ever happens to a property, somebody's got to look at this. Not advocating that.
No.
We're just joking.
No, we're not.
Yeah. Okay. So if a real estate investor hires an uninsured contractor to work on a rental and that contractor gets hurt, who's exposed?
The owner of the property.
The owner of the property
being exposed. Correct.
Wow.
Again, think of it in this terms. We've all done it. We're all guilty of it. On a Saturday afternoon, you're piddling around the yard, and then some guy shows up in a pickup truck with a ladder and says, hey, can I trim your trees?
Right.
Or can I pressure wash your roof? And you're like, sure, go ahead for $100, why
Yeah,
not?
right.
We got a bargain. But if that individual falls off the roof, falls off the ladder, and gets hurt on your property, then it is your responsibility. But Friday nights we like to be home, order pizza, and hang out and watch TV. If that delivery person, once they get into your property, slips and fall, okay, you have liability. Now we're gonna throw workers' comp and all that stuff. Yes, yes, yes. But you still have the exposure of that pizza guy coming in and falling on your property.
I remember when I had my process service company, I used to tell my guys because of our liability insurance that if you're running up the stairs and you knock somebody over and they fall down, grab them, drag them in front of your car, and then run over them because we're not covered when you knock them down.
If he falls on your property, just take him out to the parking lot.
Right.
Okay. That's an option.
You got to drag him. God. Reminds me, this isn't about insurance or anything, but this just reminds me of, we used to, so when I started my company, my process service company, we actually started as a delivery company. And we used to give everybody a test. Before we hired you, that it was a test to see if you could read a map, and then we asked you a bunch of questions. And every question on the test, the answer was call the office. Mm-hmm. Right? I don't know. Call the office. Don't guess. Call the office because you'll be able to figure it out. And sometimes we have information that you don't have. So we would beat call the office into you like nothing for everything all the time. So I had this one driver. He was out doing a delivery, and he got cut off by a truck. He ended up going underneath the truck and got trapped underneath the truck. The hood got smashed in and he was trapped in there, right? So they pull the truck out. They're getting ready to cut the roof off, jaws of life and everything like that. And somebody gets on the radio because we had these two-way radios and he's like, hello? And we're like, yeah, hello, who's this? And he goes, this is Officer so-and-so with the Metro-Dade Police Department. Your driver, Washington, he's been in an accident. He won't stop telling us to call his office.
Poor Walter. At least he listened to the rule, finally somebody following the rule.
Yeah, right. That's dedication.
Absolutely.
All right. So getting back to the real estate investors owning a property, what happens if a real estate investor hires a property management company, then that same scenario, a plumber comes to your property, that plumber gets hurt, who's responsible then? Is it still the homeowner?
Well, ultimately it's the homeowner. However, you hire a property manager for a reason. That's to manage a property, make sure everything is handled properly. Many times the property managers have a policy that they can include the property that they're managing. So it all depends how it's structured. But ultimately, you own it. It's your responsibility. The question is, do you put the proper parameters in place to protect yourself and your property?
We always ask for a certificate of insurance, right? When somebody's getting a mortgage, they're buying a house, right? Or same thing if they're getting a builder's risk or the certificate of insurance for the condo association and so on. Just tell me, what is a certificate of insurance?
Well, certificate of insurance, it's very important because that reflects what coverage you have and the location that you're covering, and the specific limits that you need for whatever the case may be, the condo or the builder's risk and all that. So that kind of gives you a quick snippet of the coverage. Many times, some associations and some companies may require to be a certificate holder, which then the name will be on the certificate as well. But certificate is basically a snapshot of the policy of the coverages that they have.
All right, nice. Now, what's a mistake that someone can make that would void their coverage without them even realizing it?
The biggest thing we've seen out there is lying.
Okay.
Lying or misreporting or underreporting. And I mean by, trying to skirt the system. It just doesn't work very well on your side. And but it's really a lot easier to do it right than to not.
Okay. All right. Now, how often do people guess at their coverage limits instead of actually knowing what they need? Like, how much do they say, I think I need this?
Well, many times. And you know what? It's funny. You touched on this a little bit earlier. People getting insurance online. Many times they get a policy they don't know. They think they have what they need. But then if you're in a service industry, many times certain places may require you certain limits, certain coverages that perhaps you did online, you didn't know you needed it. So that's why it's very important to speak with a professional that understands your business, that explains the coverage you're going to get, and see what you're going to need in the future. One of the things that I speak with, especially with some people that like contractors or plumbers and such, is many times they say, well, I just need general liability. It's like, well, you're going to need general liability, but you're also going to need this coverage because every single time you're going to do a contract, they're going to ask you for this because of our experience with our clients. We have one client that every year we have to do over 25 certificates of insurance for him because of all the contracts, and they require different certificate formats, which we have to do for every single one of them. So each industry, each person, each contract is going to be a little bit different. At the end of the day, you're getting a similar coverage, but it's just depending on the contractual agreement that you have.
Now I know insurance is one of those things, kind of like mortgages, that people have to have. Nobody wants to get insurance, nobody wants to get a mortgage, but we're a necessity, right? Do you have any over your life, over your 27 years? Do you have a story that kind of sticks out where somebody was actually covered for something they didn't even know they were covered for, and thank God you were there?
I did have somebody, and I'm going to go back to the professional liability side because we see that a lot, is the professional liability policies many times covers more than just a professional liability. It covers if you're investigated by a licensing board, license investigation, or any kind of complaints. And we had this individual that one time, and I feel really bad. She was an amazing. She recently retired, amazing client, and she inadvertently made a mistake with the billing side of it. She didn't know her insurance policy covered it. And I'm like, yeah, not only do you have the policy that covers X amount, it was like $50,000, but you also have this other coverage that you had purchased before that covers $100,000. That's $150,000 to cover that investigation that you're going through. Uh, Unfortunately, she ended up using up every single penny of it,
Okay.
which usually, standard you don't. But it was completely one of those circumstances that it was just one in a million. And thankfully enough, she had that coverage that she completely forgot about it that we knew. It's like, you need to use it.
Have you experienced anybody who like filed a claim and you were like surprised that it got denied?
Oh, there's been many times that we get very surprised that it's been denied for some reason, and a lot of things is technicality
Okay.
and how the claim is filed. But yes, it's very few times that I've seen it, but yes, I've seen it.
Is there any recourse for somebody who has a claim that's denied?
Well, there's different ways that you can go back to the insurance company and discuss it with them and come up with some sort of settlement. But really, you have to make sure you're getting the right coverage.
Okay. Now, for going back to real estate investors, what's the one if you can give them a piece of advice that says, "Hey, this is what you should get from everybody who comes to your property." Is there, you know what I mean? What would that advice be to make sure that you have it from whether it's your tenant, whether it's the people who are coming in to do repairs? What would you tell them? This is what you make sure you get.
Well, right off the bat, if you have an investment property, then you definitely want to have liability. Anybody that comes and works into your property, you want to make sure that they have liability insurance. You want to make sure they have workers' compensation, especially if they're, depending on the kind of work they're going to be doing there. But definitely liability for sure, because if they cause any damage, if something happens, or they because of their fault, another sequence of events, you want to make sure you have that in place. And also, when you have a tenant, make sure they have renters insurance, because you want to make sure that protect your property as much as you can. I know sometimes we minimize, who cares? But when it hits your pocket, you care. And I'm going to give you a personal story. Recently, we were having some work done in our house, and we were redoing a bathroom. And the cabinet installers, they came in to put the cabinets in the bathroom, and they had to go through our bedroom because it was a master bathroom, and too many pieces along the way. So we're like, okay, you guys do your thing. 2 days later, we noticed that there was some jewelry missing, and they stole 5 bracelets. The individual stole 5 bracelets, my wife's bracelets. I'm going to tell you this: we recuperated 4 of them. So, but in case you didn't know this, if the person goes in and pawns the jewelry, the police officer found it. He told us about it. We went to pick it up. There's only a small period of time for you to get it without having to pay. After that, I had to pay what he gave the guy, which is $2,000. So I had to pay $2,000 to get my jewelry
back. Right.
So I spoke with the owner of the company. I explained to him. He knew what was going on. And he said, well, you need to file a claim. So the liability policy would have filed something like that. He chose not to, but that's why you have to make sure you're working with somebody that's insured, because things like that do happen.
And so can you force him to file a claim? Or you just sue him and then
I can sue him. I cannot force him. I can sue him, and his best interest will be to either pay out of pocket or file a claim.
Right. Wow. What's the most common claim you see come in? Is there one claim that's more common than the other?
No, there aren't that very common claims. However, one of the things I see a lot on the professional side, especially law firms, is missing deadlines. That's the biggest complaint that I've seen or claim.
Okay.
Yeah, they can be a little bit, but when you miss a deadline, it hurts somebody's livelihood.
Right.
That's the only thing. And another big thing is claims that we've seen is lack of documentation and communication.
So for somebody shopping for a policy right now, what's something they want to make sure that they do to make sure they're not underinsured?
They want to make sure that, first of all, they want to speak with someone that understands the business and understand what they do and what the projection is and what the future plans are with the business. You want to make sure that you're covered as far as your business, your property, every aspect of it. Think of it. Listen, you don't want to go insurance poor, and we can all do that very easily. Mm-hmm. But you want to make sure that you cover all the bases on your business in order to make sure that A, you're compliant with the landlord, and B, should something happen, you're covered.
All right. Now, but just kind of ballparking, what can a business let's say budget for insurance? And I know that different industries. Let's talk about like professionals. Like most of your clients are attorneys, law firms, medical practices. Typically, if you take their annual revenue, what should their budget be? Their percentage of revenue should be for their insurance.
Well, if we're speaking about their business insurance, depending on, of course, many factors, but you should consider at least starting at $1,500 for the office insurance. That's a startup. For the professional, depending on size and things like that, you're talking about $2,000 or $3,000 starting point.
Gotcha.
It goes from there. And also, the one thing that we have to understand in insurance is territorial. So, for example, somebody in Miami, we can have the exact same business, same scenario in Miami and one in Tampa. The person in Tampa is going to pay a lot less insurance than the one in Miami. So, insurance companies use territory as a factor to come up with the rates.
Got it. All right. So there really is no one size fits all type of thing. It's
not at all. People need to understand that it depends where you live, zip code, city, state.
What's something that you wish more people knew when they came to you?
I wish they're a little bit more educated on what they want to have and not just think of pricing.
Right.
Think about, okay, this is what I need. How can we make it work, and how can we make it work within our budget? Pricing is not everything, and many times that we come across clients that come to us, and they say, "Oh, I need to redo my insurance," but then again, they got their insurance 15 years ago. Today, they're in a different position, and when we do it, they go, "Oh, that's too much money." It's like, well, yes, because it was good for 15 years ago. Right now, you're a different situation in your business. Your revenue and the size of your company and all that has changed drastically. So you're really not properly insured.
Yeah, I think that happens a lot. I think that happens too, even with like people who do additions to their property and stuff like that, and they don't change their policy limits.
Well,
I would think in business that happens all the time.
Perfect example in homeowners is the fact that when I purchased my home, and I've been in my house 27 years. So when I purchased my policy 27 years ago, there was a value of X. So keep in mind one thing: the homeowners policies, what they consider is if the house was a total loss, how much it would be to build it back up to today's codes and standards.
Right.
So, of course, that's going to change because from when I purchased my home in 99 to 2026, codes have changed drastically, building codes. The cost of materials have changed drastically. So that's why many times I tell people, I want to price my insurance. Like, well, why is it so much higher? Well, because it's being calculated at today's market cost to rebuild your home from scratch versus whatever value it has from when you wrote the policy, whatever, many years ago.
All right. Can you write in Michigan?
Yes.
Okay. California?
California, yes, we can.
Utah?
Yes.
Okay. We're going to go through all 26 until I get one wrong.
Colorado as well.
All right. So before we wrap up, so if for somebody who is thinking about, who wants to have their policy looked at to make sure they're covered and get your expertise, or to change their coverage, how does somebody get a hold of you?
So our website is advancedprofessional.com. And
it's going to be below here. I'm going to challenge Cole.
Perfect. Okay. And they can always call our office, 954-725-6112.
Also here.
All of
Cole, if you're listening.
I pride myself in the fact that, each one of us specialize in what we do, and we're good at it. And we focus on that particular aspect of insurance. So we will be more than happy to talk to you, discuss the opportunity, discuss what's best for you, and get your input and work together to structure something that works for you. But yeah, our office is located in Deerfield Beach, and thankfully we're celebrating our 20th anniversary this year. We formed Advanced Professional in 2006, so we're very proud to what we've done, and our team is amazing.
This has been great. I really appreciate you sharing your time, and for our listeners to get sort of that education in commercial liability insurance or commercial insurance. I know that it helped them a lot. We didn't talk a whole lot about real estate, but that's okay, as long as we put out useful information for people. This has been the Loan Doctor Podcast. I'm Rich Brandt, the Loan Doctor, with my good friend Joe Santiago. Thank you for being in my waiting room.